Loretta Mester is the former president of the Cleveland Fed. President Mester joins me now. Well, it didn't take long, did it, eh? And we're back into talking about recessions and what are the odds of... We had it with tariffs. We had it today before. What do you think? I mean, is it too soon to put a number on it in your view?
I think it's too soon. The path of the war is going to determine the path of the economy and then the path of policy that is associated with that. I think there's a lot of uncertainty of how the war is going to work out. And if you're a policymaker thinking about it, or even the people doing the forecasting, as you can see, they're putting probabilities because they have to think about different scenarios. So at this point, we know that oil prices have raised measures of inflation. What we don't know, how persistent will that be? We haven't seen really a pullback on the real side of the economy in terms of growth and employment. But we do know that generally when oil prices go up, if it lasts long enough, you'll see some pullback. What we can't tell now is what the magnitudes of those will be and whether policy has to react to those developments.
In a sense, policy needs to react, but can't react, and frankly doesn't know what the reaction should be at this particular point. As you know, if you listen to Chair Powell, he was very blunt. Well, of course you did. He was very blunt about the level of uncertainty in this scenario. Until you get clarity, is it a case of sit on your hands and do nothing, do as little as possible, just in case?
Well, they are doing something because I know every central bank is evaluating the risk and looking at what the path of policy should be under different scenarios. And I mean, in the US, we're in a good situation in the sense that, you know, labor markets, we haven't had a lot of growth, but we haven't seen a lot of layoffs, and the unemployment rate is still low. So we don't see a big impact there yet. Inflation has come down. I think it's still too high, and I think that's where I would be focusing in on at this point, given the high oil prices and the fact that people have experienced high inflation for at least 5 years. And that we know influences how they feel about inflation going forward. So I think inflation expectations could move up on this oil price shock. And I think any central banks in that situation has got to be focused on those risks first. And then if the inflation shock is big enough and the uncertainty shock is big enough, we might see an impact on growth. That comes later.
But I guess you know, I hear what you say, but how much leeway are you willing to give before you would want to act? What more would you want to see? Because we're clearly not there yet, but we can't be far off it. And as you've talked to me on many occasions that if you wait until you see the evidence, it's too late.
Well, you see signs. You don't have definitive, but you will be able to see signs. We already see in the financial markets that some of the market-based measures of inflation expectations, and even those a little farther out, have been moving up. So the Fed and other central banks are going to be looking at those signs. There's survey evidence. There's things that will show up earlier, right, than what you get from the official statistics. Firms are in a position now of having experienced high tariffs. Now, on top of that, there's the oil price shock. I think they're going to be more willing to try to raise prices than they would have if they had one shock. So this shock upon shock is reminiscent of what we saw in 2022.
How close are we, do you think, to needing to raise rates?
I think the Fed will be very reluctant to do that because they can hold where they are and still try to maintain expectations where they're going. I think, you know, Chair Powell, when he speaks, he really emphasizes that they're focused on keeping inflation, but at some point they may have to raise rates. I think they'll be reluctant to do so because they have to balance what's going to happen in the labor market. I think the markets now are putting more weight on a rate rise than I would expect to happen. But again, they're making their assessment as well. And everyone's sort of trying to work through this uncertainty as best they can. But I think the Fed would opt for holding for longer rather than raising. But everything's on the table, I think.
Gosh, it's extraordinary times. Thank you very much, Loretta, I'm very grateful.
Thanks, Richard.
Good to see you as always. Thank you very